Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Come on in and join the family by hitting the like, subscribe, and the notification bell. Those of you that's been rolling with me, keep hitting that like button. Thank you so much. You guys know I don't have a WhatsApp or a Telegram. Don't fall for spam. And today is Moo Monday. Moo will be the top link under the class. So under the class, then Moo will be the top link. They have a promotion. We'll go into that later. Let's look at what's happening with the market today. So now let's talk about higher interest rates and how it affects the equity market, or should I say stocks, okay? There is some chatter here, should I say an interview from CNBC that I want you guys to listen to. We're also going to talk about why Fisker Automotive is up by 30% actually at the time of this, and the partnership in the EV space that I think everyone should know about, okay? So let's take a listen.
Yields to stop rising here, what gives?
I think that the message has been clear from the Fed for a little while now, which is they're not going to cut interest rates. They're probably going to raise interest rates a little bit more. And I think the disconnect was that the stock market thought that they were kidding, right? Kind of like wink, wink, at some point you will lower. And I think what we saw last week is the realization that they're not going to lower interest rates. And I don't necessarily think it's like, hey, rates have to go down for the market to recover, but it is part of the ingredient to see a new bull market for the Fed to stop hiking interest rates.
You agree with that, Brian?
Listen, I think we have to have interest rates and equities decouple for there to be a meaningful rally in one or the other. I don't think we're going to get a rally in both. In other words, if growth falls and the Fed's done too much, interest rates will rally, stocks will actually sell off. So I think I'm looking for some decoupling here. The Fed's almost done. They've told us that. We need to know if that's right, if they've done too little or too much.
One more second on that decoupling, Brian. I just want to make sure I follow. What do you mean by that?
Well, again, I think if you look at the last year, we've had interest rates go higher. At the same time, as interest rates have moved higher, equities have started to wobble. In other words, when rates rally, you see the NASDAQ go up a lot, right? Rates fall. So I think what has to happen here is, look at the last couple of weeks, right? 10-year notes went back towards 4%, and the equity market corrected off of its recent high.
Exactly.
So I think that correlation, as long as we're moving in kind of unison, I think we haven't decided yet whether the Fed's done too little or too much.
But Andres, a quick word on that before I move on. Do you agree that we haven't just made up our minds yet?
Look, inflation data in January showed that is not going to be a straight line to 2 or 3%. And I think people were optimistic about that, right? The stock market was a little bit optimistic as that being the base case. If that's not going to happen anytime soon, it's hard to see the Fed all of a sudden lower interest rates. That's the attachment between interest rates, inflation, and the stock market. And I just don't see it yet for the stock market having the driver to go all-time highs in this type of environment.
Just like the guy said, it is true. Everybody's trying to see, is the Fed going to turn around and pivot at the end of this year? Well, no one knows that. The truth is we have to wait and see what the Fed does. Now, I do believe I know everybody, all of the talking heads keep coming on saying it's never going to happen. Forget about it. There isn't going to be any pivot, but there could be a pivot. And that pivot will only take place if the Fed goes too hawkish and causes a extreme downturn in the market. Then he will be forced to pivot. And it's less likely that that'll happen. I do see continued interest rate hikes. Right now, I believe the market has priced in 25 basis points. I'm simply trading the market that I'm in because no one, and I do mean no one, has a handle on this market. Good news was good news and bad news was bad news last year. Now this year, good news is bad news and bad news is good news. And now it's shifting back. And there is no correlation like the gentleman was saying. It's just off track and it's off whack. Okay. And so we could see today that the Dow in the entire stock market was doing well today. It was roaring back. Here we have 40 minutes before close. And look at where we are. Look at this roller coaster today. So the pre-markets opened green and it went greener. And that's my new word, greener. And then it sold off and now we were off session lows, and now it's trending back down. We're at positive, we're up 13%, positive 41. So the next FOMC meeting is March 21st and 22nd. On this morning live, I made a mistake and said the 20th and the 21st of March. The FOMC meeting is the 21st and 22nd. Okay. So for those of you that didn't catch this morning live, I want you to remember these key dates that are coming up. The ISM, IS as in Sam M, is on the 3rd. All right. That's coming on the 3rd. And then we got CPI coming on the 14th of March. We got PPI coming on the 15th of March. And then the 21st and 22nd, we have the FOMC meeting coming on March. And then on Good Friday, which is April 7th, we have jobs. So there you have it, all back to back. ISM on the 3rd, CPI on the 14th, PPI on the 15th, FOMC on the 21st and 22nd. And then on Good Friday, we have the jobs report. Okay, so make sure you 21st and 22nd on the FOMC meeting. Make sure you govern yourselves accordingly, like they used to say in church. All right, what else is going on in the market? We're just going to get straight to it in this. Fisker, as you can see in the upper right-hand corner, up 31%, almost 32%. Fisker has ran. For those of you that don't know, Fisker is an EV company like Lucid, and it ran up really, really hot. What else is going on with Fisker? As you can see down here, Fisker announces partnership with ChargePoint. Boom. I'm reading this at the same time that you guys are. Fisker announces partnership with ChargePoint Holdings. All right. For those of us that have ChargePoint, which I do have some ChargePoint that I have had since I've had ChargePoint since they were a SPAC. I don't have much, but I do have some. They are both running hot. As a matter of fact, let's look at where ChargePoint is right now. ChargePoint is not up as much as Fisker is, but Fisker is cooking with grease. ChargePoint is up 4.5%, but Fisker is just killing it. Fisker's Q4 top line jumps 7-fold. Forecast potentially positive EBITDA for 2024. I want you guys to Google what EBITDA is, okay? For 2023, right? Look at that. Outstanding. Fisker reported fourth quarter. Look at this. So FY22 sales of 306,000 versus 41,000 a year ago. That is insane growth, right? Total operating costs and expenses rose 33.5% to 178.2 million. And so I want to, instead of going into all of the numbers, you guys can read that for yourself. I want to talk about the forecast because it's what I want to end in. And so the forecast is future. All right. So a lot of companies, since we're supposed to be going into a earnings recession, one of the things that has to happen is the future outlook of these companies. I'm just breaking it down. Is looking, so they're saying instead of delivering this many cars, we're going to be delivering slightly less. So they're going to be giving lower forward guidance. Follow? And so because their forward guidance is supposed to be lower, and they're giving a strong forward guidance, they're saying not only are we killing it now, but in the future, the forward guidance, we're going to continue to kill it. That's why the stock is doing better. But we're supposed to, according to some of the analysts, be going into an earnings recession. And why in particular? Because we're supposed to see these companies perform less than what's expected. Plus, they're supposed to be giving weaker forward guidance, causing us to go into a earnings recession. Follow? But so far, that hasn't happened. Actually, a lot of these earnings, based on what was expected, are actually doing quite well. And some of them that are doing well, the stock still falls, right? For a company to make money right now, all they have to do is just say we're getting into AI, which is a term that is overly used, and announce that they're laying off. If you look over the last 3 months, the company that announces that they're laying off employees are the ones, the stock that are going up, because what are they trying to prove to us? That they're operating leaner, right? So let me know if you're in ChargePoint. Absolutely let me know if you're in Fisker. Fisker was a part of my portfolio, but it isn't. I sold it when the president signed that bill for infrastructure and all of the EVs popped. I popped mine back then and haven't gotten back into Fisker, so I missed this 30% bump. Let me know if you have it. Let me know what you plan on doing it. I will tell you, if you are already in profit with Fisker and you just experienced another 30% pop off of this news, me personally, if I was in your shoes, I would consider doing a little profit taking, because 30% in one day means that there will probably be a cool off. Not in the future, but this week, as early as tomorrow. Now, it could run up again tomorrow, but by Wednesday, it could be cooling off unless they come up with more news, right? Sometimes we suffer from too much too quick, okay? So let me know if you're in that play. Let me know what you think about also to ChargePoint. Right? Listen, it is Moo Monday, and I want to show you guys this. With your Moo apps, I want you to hit trade at the bottom in the yellow, and then hit trade at the top in the yellow, and you will come to this window, right? I just want to do this again for those of you that missed it. You'll see in the very top right-hand corner, you'll see a little drop down that says Pro. Tap that and go to Light. And I want everybody to do that, because in the light, you could see it's just simplified, right? It has all of that data, that's confusing to a lot of people. You just want that to be gone. Also, too, let's go to the bottom again here, and let's go to markets, right? Someone said, could you go over that again? So at the top there, you see where it says heat map. Let's go to heat map, and we could see what's green and what's red. We could see that software is doing good. Consumer electronics is doing well. Semiconductors are doing well. And so you got the entire different, we see credit. So you could see markets that are doing well. And sometimes what I'll do is I'll go to the red and see where I could find opportunity. I like to buy red and not green, okay? So as you can see, semiconductors at the bottom there is doing well. And so if we go to semiconductors, right? And all you got to do is scroll down and you can see the different semiconductor companies. See here? And so you could see what's green that day and what's red that day, all right? And so that's one of the things that I wanted to point out, because a lot of people ask, how do you look for stuff? Let's look at oil and gas again, like we did the other day. And as you can see, COP, EOG, right? We're down. So if it's down enough, I'm just going to buy little shares of oil, because I believe oil is going up. And you see the other companies there. I also wanted to show you that you buy one just for downloading Webull and depositing $100. You could see right there. Depositing $100, you're going to get 4 plus 2, that's 5, all right? And then it's actually a total of 7 by depositing $100. And then if you deposit $1,000, you're going to wind up getting 10 more free stock, all right? So you see the promotions there. It is Moo Monday. Under the link for the class, it will be the top link. And that's it for today, good people. I just wanted to hit you with a lot of information, get it out there. Hopefully you guys made a little money today, and we will see you tomorrow. Live, love, laugh, and learn.